I guess a little bit about me. Before I became a venture capital investor, which was in January 2022, I actually was more on the startup side.
Some of the upfront red flags that you would call out to say that in the first call itself, if some of these things are your deal breakers?
I have a persona in my mind that would use this product, showing
Perfect.
up for a call on time, being responsive, professional, sending the data as requested.
Hey everyone, welcome to another episode of Hash It Out, and this is part of a new series focusing on getting stories from amazing Web3 investors in our ecosystem. I'm your host Bimlesh Gundurao, the one of the co-founders at Foundership. We are a Web3 AI accelerator VC operating out of Singapore, Dubai, and India. So we enable early stage and pre-token launch stage startups and ensuring that they get token launch ready. And we are super excited to share that our top 10 companies in our portfolio are now valued at over 330 million, and four startups have already launched their token in 2025. And as we get ready for an amazing year and a few years ahead with another new revised energy brought into the crypto space, we thought this is a great time to bring in our investor network associated with foundership and share their investor theses and journeys, with more in the ecosystem so that all of us learn together, grow together, and invest together. So with this, I'm super excited to have Mona Tiesler, the investment manager lead at Tokentus with us today. And she's been an early supporter and a go-to person for the entire foundership team. So super excited to have her join us and share her theses, philosophies, and her approach to investing in the Web3 space. And excited to bring her perspective out today with all of you. So with this, thanks, Mona. Thanks for joining in today.
Thank you very much for having me.
Fantastic. Always a pleasure talking to you. I remember we first met, in our first trip to Dubai 3 years ago, and
Yeah.
that's where the entire journey got started of our association. And super excited that we have been able to work together closely, also sharing a few deals together, scouting for great projects together, and stuff like that. So over to you, Mona. Why don't we kickstart with a brief, introduction of your? Tell us a little bit about yourself. What got you into the venture investing space, and more about you. Let's start from there.
Yeah, absolutely. Thank you so much for having me and for the great collaboration and friendship we've built over the years. It's been great. Yeah, a little bit about myself. So as you mentioned, I'm the investment manager or the head of investments at Tokentus. Tokentus is a German venture capital fund. We are a publicly listed entity on the German stock exchange, backed by a lot of the German banking network. That's also why we have this slightly unusual structure. And we invest pre-seed to Series A. A lot of times also, the companies I would say are in the slightly later stages of the Series A as well, which we kind of call growth, but it's really early stage growth companies. A lot of our companies are in the financial services, Web3 infrastructure space. That also is because, due to having a banking network backing, we have the biggest value add for startups that are kind of playing in that space, but that's not a limitation. So we do invest also outside of that scope. We do invest in equity, in tokens, as well as hybrid models. And yeah, we're global. So even though the fund is based in Germany, I'm now based in Dubai. Our colleague is in Lisbon. We have people in London. So it's quite a global network. And I guess a little bit about me. Before I became a venture capital investor, which was in January 2022, I actually was more on the startup side. Well, first I started my career in management consulting in London for 4 years. Then I went and built the German entity of an education technology startup while the founder was building it in New Zealand. So our idea was to tackle the world from both ends. I then went to do an MBA at INSEAD. Simultaneously launched another startup called Timely, which was in the food technology space, and then ended up actually working with a cryptocurrency kind of fintech app called Bitwala/Nuri in Berlin. Before I then started my venture capital career. So I kind of call myself a kind of an educator slash investor slash entrepreneur and also mentor, which I also get to do at Foundership.
Fantastic, amazing. There's a great switch between entrepreneur and an investor. So you're kind of experiencing both sides of the coin.
Yeah, both the good and the bad and the ugly on both sides.
Absolutely. So for last couple of years, you've been investing, in both equity and on the token side. So talk to us a little bit about what have you seen as some of the big, um, ecosystem level changes over the last, say, 3 years between the previous bull cycle and, from where we are right now. We are kind of in a bull bearish, flattish mode right now. So talk to us on what are some of the things that you have seen in terms of uh, the projects, the founders, and the investment philosophies. It's both from a starting point and from a transition point of view.
Yeah, it's a good question. I think in this industry, we really see very strong cycles, right? Really strong up and downs. Also from a sentiment perspective. So investors and startups are booming and deploying lots of money and building like crazy in kind of those bull market cycles. So, the early, DeFi summer, for example, is a good example where everybody was building a decentralized finance product. Everybody was getting investment. There was a huge consumer or client influx, retail influx into the DeFi ecosystem. And this was this whole new narrative and big thing that was born. And then of course, we had a bear market where we saw, okay, now a lot of the yields are not the same, a lot of the projects are not performing the same. A lot of token launches that are done in bull markets sadly often result in the tokens no longer surviving during a bear market. That's very common, specifically a lot of projects that launch tokens that don't have real utility or the utility wasn't really thought through. So then if there is no speculative buying involved from the market, there is no reason for the token to rise in price, hence the token dies. And we see that in every cycle. We also saw that in like a DeFi summer cycle. And even though you could argue that there's more utility you can bake into DeFi, but I'm just using this as an example to kind of explain a little bit kind of what I've seen or what I've been investing in. And I would say when we have those bull and bear market cycles, we get very different types of investor mindset.
Right.
If I speak about Tokentus, I think when we started or when I started with Tokentus, we had a very strong mindset on equity and only doing a token warrant if we do have, a safe agreement or an equity portion in the company already. We were really kind of looking more on the fundamental investment basis, a little bit more like a Web2 venture capital fund would look at startups, if from a revenue perspective, attraction perspective, market size perspective. And doing that financial modeling type of due diligence, which, back in 2020 or so was quite, I would say, still normal-ish. A lot of new entrants from the investor perspective came into the market, and until like 2022, 23, we had very much that approach. But then we also realized that, a lot of the companies that have an equity component have a really hard time exiting the market or being bought because the market is not maturing as fast as we might have predicted in terms of more widespread institutional adoption, for example. So then we said, okay, we can do more token investments. Maybe in this current, let's call it bull cycle, but it's definitely
Right.
more of a flatlining of a heartbeat that this looks like at the moment.
Yeah.
But we've seen that a lot of the token launches that are actually I would say of projects that are a little bit smaller that didn't raise 20 million plus have not performed so well. Because again, I don't think there's enough buyers, there's not enough retail maybe that's in the market, and often again there's still not enough utility in some of those tokens, not enough usages for new chains, not enough customers to buy and use a lot of the products, which of course now creates a bit of this interesting sentiment that I'm sensing in the market, which is like, where do we stand, right?
Right.
Is it better to do kind of equity investments? Is it better to do hybrid investments where you have like a little bit of both sides, but then token warrant usually means that, the tokenomics are not fully fledged yet, which then could also lead to overly fast done tokenomics and launches because people want to time the market, which then might not be ideal either, right? Because if you might time the market, but if your token doesn't have utility or doesn't have the baked in maybe buyback or burn mechanisms that are needed in order to, circumvent massive sell pressure,
Right.
then you also end up in a tricky situation, even though you might be an incredible product. So it's a very long-winded answer, but what I'm trying to say is that I think investor idea sentiment and what investors invest in has changed every cycle, pretty much
Exactly.
every top, every bottom, every top, every bottom. It's a different
Yeah.
viewpoint. A lot of VCs raise for a specific cause, for example, gaming or deepin. They have much more, I would say, difficulties maybe with dealing with the market because when a narrative, and that's another point, narratives, when a narrative is hot, then, a lot of investments are made and a lot of startups are building in the space of a narrative. In our case right now, I would argue it's the AI agent that is a big narrative right now. And a lot of projects are either building AI agents into their product or offering, or are building AI agent infrastructure or the agents themselves. But then if that narrative, fizzles out, then you're standing there and you're thinking, oh, if I had a fund just for AI agents, I might be in a bit of a pickle now.
Right.
So I've learned that, at least in my opinion, a broader viewpoint, open eyes, flexibility, and a good viewpoint and analysis of the macroeconomic climate, as well as what the crypto market sentiment is probably very much needed if you're an individual investor or a builder or a venture capital investor, in order to be flexible and adapt to a very volatile and changing market environment.
Yeah, absolutely. Because the risk and rewards also go very much hand in hand, right? There's a high risk, high
Yeah.
reward, also in high risk, high loss game as well with this.
Absolutely.
Amazing.
How do you see that? Because I know you're also, you have a lot of startups. I think they're also quite broad, right? In their scope
Yes.
of which vertical they're in.
Yeah, absolutely. Your question is, you actually preempted one of my next question. I think a lot of startups in Web3, especially when they are in fundraising mode, um, there are two types of founders that we see. One are super shrewd who have a great product, but who change the narrative based on where the cycle
Mm,
conversations are going towards. You don't typically understand these narrative in the first time you pitch, but as you keep pitching and talking to a bunch of investors, you understand that, hey, you know what, the market narrative is talking this cycle, everyone seems to
mm,
be attracted towards deep in. And if you're a shrewd founder, you try to figure out, okay, is there a deep in story in everything that I do, right? Maybe it was hidden under the hood, but now can I surface it up, right?
mm-hmm,
And then there are the other type of founders who continue to push their perspective of storytelling and narrative, And at that point of time, if it doesn't matches with what's going on with the rest of the investors in general, such founders tend to not have it easy in their fundraising journey,
Mm.
right? So this
Yeah.
narrative of different forms of the markets being up, markets being down, I feel it's also both a challenge and an opportunity for a founder to understand the market commentary, right? Because it's changing so fast, because it's a 24-hour cycle.
Mm.
Either you're building for a local market, based on a local market, but enabling cross-border, financial inclusion. But the surrounding market commentary is also very important for you to know, are you in the top hot sectors or are in the bottom hot sectors as well?
Mm. Mm. Yeah. Yeah.
Fantastic. What has been Tokentus's key philosophy when you started out, and what have you learned through this journey of looking at narratives and theses point of view? Are you also a horizontal focused investor, that you look at multiple sectors, or you're sector agnostic, but you focus on great founders, great projects with some token fundamentals? What are some of the things that you look at from where you started to where you are right now?
Yeah, it's a good question. Generally, I would say we are agnostic, but the reality is within the team and within also the value add that we can provide to teams, it's naturally a little bit more in the kind of financial services infrastructure space. We also did some that were community management, for example, for brands, or something in the reins of like Quest platform, in order to, bring users into Web3. That's kind of another, I would say, narrative that we did embark on. Mainly, those two are probably where you'll find most of our investments. I think the reasons are because they're very B2B focused, and we naturally had a bit of an institutional context behind us. And so a lot of our knowledge and previous experiences have also been in the B2B space. So a lot of our kind of companies fall in the B2B2C or the B2B space. But that's not that we only invest in that. It's just a little bit of what happened naturally from the course of our, investment portfolio. But again, I think what's really interesting from just where the market is going is also that we were seeing a lot of infrastructure improvements that were coming along. So people were building aspects like modularity, different data availability layers, for example, into the tech stack, or into the blockchain builder tech stack that is out there, which I think has reached a certain maturity, and it is constantly improving with new upgrades. For example, Chainlink recently has pushed a new upgrade, or will be pushing a new upgrade that allows for any developer to be able to integrate and use the Chainlink infrastructure. So little things like that, which I think is really showcasing that slowly but surely we're actually ready for more consumer focused applications. I think it's been a bit slower than I anticipated in terms of getting there, but our infrastructure is already good. It can always be better, but I think there are improvements made. But from an investor perspective, I'm also now starting to go away from infrastructure and maybe just B2B or B2B2C, but also trying to look at more consumer applications. What technology are we utilizing that we've built over the past, several years, and are now engaging into more consumer focused applications. So I think that's a bit of a natural flow. Not saying that we won't do infrastructure, we won't do B2B. Absolutely, we will.
Right.
But I'm also expanding my own, viewpoint a little bit and educating myself more on the consumer space. From what we've seen in terms of learnings, like I mentioned, we started with a more equity as a focus
Right.
of where we wanted to invest, which then morphed into, oh, we would really like to have a token component, which then morphed into pure token investments, so investments into SAFT agreements, which now has morphed into also doing some liquid investments. So actually, buying in the open market some of the projects. So we've really gone through a massive evolution, actually, of being a rather Web2 type investor that invests in Web3 to a very crypto native or more crypto native investor that is, even playing on the liquid side.
Got it. Do you also do any liquid investment strategies, or you're purely into pre-token launch type of investments?
So we do pre-token launch in terms of SAFT agreements, but we do also liquid. And what I mean with that is not fancy strategies where we hedge our bets or
Right.
have long and short positions, but I would say we research a project in a lot of detail and see, okay, what is it doing? How much developers are building, how much developers know this language, how many apps are being utilized, what is, how many transactions can this chain be processing, etc. And then, for example, if it is a chain, but we are looking at kind of, I would say, some more Web2-like metrics to analyze information on the open market about projects. And then if we think, okay, we believe that this is an undervalued project in the market, we would go and buy the token in the open market
Got it.
and see what happens and then sell it when we think, it's time to sell, or when we've reached a certain threshold of, a certain upside potential, such as 20%, 60%, 100%, or whatever multiple we decide we would like to attack here based on the research we've done. So it's a little bit more venture capital version of liquid investment.
Got it. Got it. Fantastic. I think this entire approach to if I were to use a phrase, soft liquid investments versus
Yeah.
pure project pre-token launch investments. I think every investor, as you go deeper into this ecosystem and market, you learn to hedge these bets, because you're
Mm-hmm.
also, as you rightly said, you also see opportunities after token launch as well. Someone who's got undervalued and now they're getting their product right, their community right, and their utilities right, and now they are poised for a hockey stick growth, and that's a potential. Why would someone not look at it, right? So that's great to hear about it. Um, Share a little bit of perspective on um, over the last 2-3 years across these cycles, what has fundamentally remained the same when you evaluate projects and when you look at founders who are pitching to you to raise funds? What have been some of the I would say lessons that you can share with the founders that you have raised money, that you have written checks to, and the founders that you have not written checks to? What do you share some thoughts there?
Yeah, sure. I think when investors say, oh, it's really about the team, a big portion is about the team. So my first learning that I would like to share is, if you are a founder and you are, you know your strengths, and you might be extremely technical, you might have the idea on how to build the product that you want to build, but you may not be or may not like fundraising, sales, partnership creation. And so that might be a little bit of a blind spot in your, go to market and in the way that you can scale your product. So finding a co-founder or highly incentivizing somebody to, want to do this journey with you, who has a complementary skill set to you, but who you also want to work with, because it's like a
Right.
marriage. So you really have to want to commit to spending time with that person in good and in bad times, then I think that's really, really important. So the founding team, the composition of the team, the composition of the skill sets is one really, really important factor that we do look for. of course, also background, right? So if you are building, for example, a decentralized cloud startup, but nobody in the team has ever worked in anything to do with cloud infrastructure, then I would question that heavily because it's a highly complex network and system.
Right.
And in order to decentralize that, you need to fully understand how it works. And if nobody has ever been exposed to this, then building something from a purely theoretical research perspective is sometimes a red flag,
Right.
and can be mitigated easily, right? By just bringing somebody in who does have that knowledge, who you want to work with. But in essence, this is really, really important. And I think founders say, yeah, we are a great team, but sometimes it's a really hard question you have to ask yourself. Are you actually a really good team?
Right.
And then the
This is
second
where
thing,
somewhere, something called the product founder market fit analogy comes in to say that, when we say founder, not just an individual, but the founding team, do you have the right market fit? One, either you
yeah,
come from that market or do you understand that market well, that you think that you succeed well in it. It's a different question that why will you win, but just that first level filter of, is this the right founding team and a fit
yeah,
with the right market? Yeah, perfect. Yeah, go
yeah.
ahead, Mona.
No, I think that's a really good way of putting it, right? Founder market fit. It's a really good way of describing it. And I guess that leads very nicely into product market fit, which
Yeah,
is also quite important because what we see also a lot is that founders are building something which is great, but it may not have anybody who wants to pay for it, right? Or it may not have enough people who want to pay enough for it in order to use it. What I mean with that is great if you're building something that's free and that people can occasionally use, but they may not be sticky. They may not want to keep using exactly your product or that product. And so there's sometimes a solution found to a problem that is not really a problem, or that just there is just no market for the solution that is found, not big enough market. And that's also something that I think some founders overlook. They're like, yeah, we made this very small, very niche, improvement, and we want to raise money for that. And when you look a little bit, below the hood, you see that, okay, but there's nobody really willing to pay for it or use this.
right,
And that's often a really bitter pill to swallow. I've also been there as a founder, so I get it. It's not easy because you've invested so much brain power, excitement, enthusiasm into it. You're so sold yourself. It's so hard to realize that maybe others are not so sold on it. But it's so important then to listen, to get feedback from a variety of people, advisors, VCs, people that are close to you, maybe even competitors or other people that you might, feel like, oof, this is going to be a tricky conversation, to really get a good perspective on, like, is there actually a market for what I'm building?
right. Amazing. Now, when you look at, so you also invest from pre-seed to Series A, right? So
Hmm.
uh, do you also do follow-on investments when you
Yes.
invest in pre-seed,
Yes.
right? So how do you evaluate? So when you're on pre-seed, it's mostly about founder market fit. You're looking at, the high quality founders. I'm sure you have some sort of an assessment framework on some of the
Hmm.
key things that you're looking at from a founder background, uh, because everyone gives out their best version when you're pitching it, right? So tell me a little bit about what are some of the key things that you look at in differentiating that, hey, these are high quality founders, they know what they're doing. How do you quantify this?
It's some soft skills. So how do they react to feedback during a meeting? How do they hold themselves? How do they explain their products? How deep can they go in terms of, some bigger picture thinking or bigger analysis on terms of like market size. That's one end. But on the other hand, it's also, of course, what did they do before? What did they study? Is this relevant? You don't always have to study what is relevant for your project. I didn't study anything to do with financial services. So that's not what I mean. It's more like if you're coming right out of university, you know, and you're building something highly technical, but you studied something maybe along the lines of more like philosophy or English or something, I would like to understand where does all this technical knowledge and know-how come from? And if that's not obvious to me, that's a question that I would ask and say, hey, I love diverse backgrounds, but like, how are you confident that you can definitely execute on this particular, maybe highly complex technological structure? That could be, I have a co-founder who works in the space and who has a very, very applicable background based on previous positions they have held, startups they have built, research they have done, etc. That's a plausible answer, but I need to kind of have an understanding of where did you come from? How do
Right.
you think? Right. And what brought you to this product at this point in your life to understand, okay, does that make sense? Or like I said, is there a need for maybe a complementary person in the team that can, subsidize some of the things that might not be perfect, or in your background or your experience. But we see everything, in this space, we see very, very young founders that, have just been coding for a really long time and then, just went into building products. We have people that have years and years and years of experience in traditional businesses or corporations who then come and become founders. We have, people who have led engineering teams at the largest companies in the world, or have just graduated from school, right? We have so many different people, and it's not necessarily that one is better than the other, but it would be important for me at least to understand why are you building what you're building and why now,
Right.
and what is your background, composition to help me understand if what you're telling me is real or if you're just a really good salesperson.
Perfect. Perfect. So this sums up the whole context, right? The power of why is so important to understand your undeniable motivation to solve a particular problem, because startup building is not a fun ride if you're looking at only like a 6 to 18 month journey.
Yeah.
Everyone has got to look at it as a long marathon of 5 year or a 10 year ahead.
Yeah.
If you are so passionate about this problem, some of the things that what you said uh, is what I would put together as the entire pre-seed evaluation framework, where you look at the why, the founder market fit, and why now, right? Which is predominantly why now and why you, right?
Mm-hmm.
Why now is more, what do you see the market forces? Are all the market forces aligned for you to win today? And what makes you and your team so fascinating, that why you guys will be the top winners when there are so many people competing for the same allocation of funds from Tokentus. So I
Yeah.
think this has come out well in terms of for any founder who's going to listen to this, to truly understand that the conversation with an investor is not primarily about something. It's at a pre-seed stage. It's all about communicating the conviction what you and your team have as to why you think you're going to be a great venture-led business for which you're raising money, for which you are able to give multiple return uh, to the investors back. I think that's the conversation between a founder and investor that eventually succeeds in a successful fundraise. Fantastic.
Yeah, I think
I think we got the crux of this conversation out here. Um, well, one couple of things that I also want to get your perspective on, while we got to talk about what are the few important things that we look at. What have been some of the upfront red flags that you would call out to say that in the first call itself, if some of these things are your deal breakers?
Hmm.
Anything that comes on top of your mind, would love to hear that.
Yeah, deal breakers is a difficult one because I tend to, you know, try to understand sometimes also circumstance. Founders can be very stressed, and therefore maybe react a little bit differently. But one of the things that usually is a red flag for me is if the founder is not able to take feedback or react to a challenging question well. That's nuanced because I think there's also investors that ask questions in a tone of voice that is not
Right.
appropriate. So I think it's also up to the investor to, have a friendly conversation and set a friendly scene for a conversation. But I've also been in several calls or meetings where, the question was just asked based on my understanding, this is not something that is possible to build because of XYZ reasons, or I do not see enough users for such a product. I don't think I would use such a product. I'm not sure if I have a persona in my mind that would use this product. And maybe if questions, they are challenging questions, right? And I think at that point, it's up to the founder to say, look, maybe you're not our target audience, but I'll explain to you what the target audience is and how big that market is. Or you might think that this technology is not ready, but actually we're way ahead of what you think, right? And here's a great research paper to educate yourself.
Right.
I think those are, answers which I think I would expect or I would love to have discussions on, whatever style, the founder has. But what I've seen, which I think is a red flag, is that there's a strong reaction to a challenging question that is met with a very dismissive answer or just a very shocked person that is stuttering to answer and actually get their point across, which often is a bit of a sign of slight immaturity, because we all know that the founder journey will come with many rejections. It will come with many no's. It will come with many challenges. And if you're not able to withstand a slightly more pressured conversation, then it's going to be a very hard journey for you, because it's
Right.
never easy for a founder, even the ones that you see on Twitter that have thousands of followers and have multiple protocols under their belt and are speaking at conferences. The vast majority of them didn't just land there, right? They went through many no's, many hardships, many hard questions, many setbacks, many pivots. And I think it's important to be aware that as a founder, your mental state and your willingness to kind of fight for what you're building has to be really, in a pre-seed stage, one of the most important aspects, your attitude also encompassing within that.
Brilliant. I think these are very important ones because, as you rightly said, right, even as an investor, it's so important to have that empathy in that conversation.
Yeah.
Have that benefit of doubt to say that, maybe there's just a bad day going on.
Yeah.
It may not be so much of a big red flag, but a minor red flag. But yeah, big red flags are a big no-no as well. How much importance do you give, in looking at some of these other soft attributes uh, in a pre-seed investment, like follow-ups, showing up on multiple calls, on time, or communicating, being transparent, responding to your request for additional data, or to giving multiple demos to different stakeholders, and stuff like that. Do some of these characteristics matter, or they hold a um,
Yeah.
lower value?
I think to me, they matter a lot. Um, Maybe not every investor is that way, but to me, they matter a lot. Showing
Awesome.
up for a call on time, being responsive, professional, sending the data as requested, or giving a good reason why this data does not exist, responding, right? And these are all really important things. Also having a pitch deck without spelling mistakes, that has, alignment between boxes, very minor things, but they're such a big, they show, if it's not the case, they show that you didn't do this by double checking anything, right? You're just sending it to investors without checking the spelling, without checking the alignment, without making sure you're sending a high quality document and respecting the time of the investor that is taking the time to read it. And of course, the investor also has to respect your time. That's just as important, if not more important. But of course, it's a two-way street here. So as a founder, I think those soft skills are really, really, really important. And they stay important even as a, growth stage
Right.
entrepreneur that's raising funding, because then you're speaking about much larger tickets with much
Exactly.
larger institutional investors. So here, maybe even more so, or in a different way, I would say, in a different way, it's really, really important that the professionalism is kept out throughout your founder journey.
Super. I think those are, we at Foundership give a huge importance to some of these characteristics, because
Yeah,
this really defines how you operate on a daily basis, right? And
yeah,
that's some of these true natures is something that you learn as an individual. You may get feedback, but until you inculcate them into your daily practices, you're always going to be messy in the way you do things at
yeah.
work, right? So
Yes.
the next part that I would want to ask you is, in your experience with Tokentus, what have you seen the average time for you to close an investment from the time you have had your uh, first introduction, either to a founder via Zoom call, or you have seen the blurb and you have said okay to a call, to actually have done the contract and wired the money?
Good question. Sadly, this depends. I think the average or the minimum time we need is 2 weeks, which sometimes is a pickle for us. I
Right.
know other funds are much faster. Um, of course, if there's extreme time pressure, we can speed up this process. But because our process requires an investment board to
Right.
come together, that is external board members, which is our investment committee, to come all together onto a call. And the founder will also join halfway through the call to give a small pitch directly to the investment committee. There is often a time scheduling issue here that just requires a few days of
Right.
pre scheduling, as well as we write a very detailed investment memo. Our investment memos are often 10 plus pages long, and this information needs to be gathered, it needs to be dissected, references often are asked for and double checked. So this process does take time. That's why I say 2 weeks. I don't think we need to, I don't want to limit ourselves in being able to participate in a great deal if just because of that timeline. But I would say on average, that is really what we expect. But I would say to founders, all VCs are really different from my experience. So you will have VCs that have turnaround times within one day. You'll have some that take months. So
Right.
it's really, it's a good question actually to ask the VC, in the first meeting and say, what is your process? How long is this going to take? And, if they don't ask you, maybe even say, look, we want to close the round in 2 weeks. And we would need your commitment, or any further calls scheduled within that time frame, because for us this is really important to get back to building. And that's a completely fine thing to say. Even if you have to raise a bit longer, at least you're setting some sort of timeline that's not utopian
Right.
onto an investment arm of a company or onto a VC fund. But it's yeah, you'll see many different things, I think, in the VC
Yeah,
world.
yeah, absolutely. Absolutely. We have
Yeah,
also heard of deals where investments have been done in a few hours. Just because there's just so much FOMO that the investor has heard about the startup from multiple sources,
yeah.
and multiple investors are also joining the round from the same investor circles. So from few hours to few weeks, I think that's a fair timeline there for both pre-seed and seed investments. Uh, how important it is for someone like you to for a founder to understand, to enable investment leads and investment managers to own the conviction that the founder has, to transfer that conviction to someone like you, so that you are able to own the conviction and to present to your investment committee. How does that transfer of conviction work?
Interesting question. Yeah, I think it's a mixture between speaking to the founder, engaging in discussion, doing your own research, because most of the time, honestly, the founders are so much smarter than me. So I need to go and I need to research and understand. The due diligence process also helps me to understand because it requires a broader range of opinions. It requires more research. It requires deeper dive into the documentation that the startup provided and maybe some follow-up questions, as well as a market analysis and a technical analysis. And then I think a combination between consistent communication with the founders, own research, and then, writing up a investment memo that follows a certain set of questions that are usually required for analysis. I've alluded to some earlier. Then that helps a lot, right? To go and pitch this then to the investment committee and say, look, I think this is a great investment because of the founders, because there's a market for it, because there's a product market fit, or I can see this team being able to find one because of these reasons. There's a revenue model here that makes
Right.
sense, or a tokenomics makes sense. There's other partnerships in the pipeline are already committed that are significant and, value driving for the growth of the project. And then you kind of formulate a little bit of your own enthusiasm, just like then the founder, and you're really invested.
Super. Fantastic.
Yeah.
Moving forward, I think you picked up an important point on due diligence. So for a pre-seed and seed investments, while you have a great conviction on the opportunity, on the way the team is solving the problem, the product itself, what do you look for in terms of due diligence? What are some of the important aspects of due diligence, and what are the red flags that you look for?
So I would say when we, for example, get references. So for example, we may ask previous project leads that they've worked with, the founders, or ecosystems, or generally seeing how, if we do some due diligence maybe with other investors that have invested in previous rounds, and we get negative feedback on the founder, on, their attitude, or maybe there's some sort of maybe not so good practices going on, that's a really big red flag. So I think those are usually areas which always the founders should have the space to explain themselves. It should never be taken for face value. But of course, it's not ideal if there's a lot of negative feedback around,
Right.
the team or what they have done before. It often doesn't resonate so well with investors. Otherwise, I also think if there's something promised that is not
Right.
there when we do a tech due diligence, and we were told there's a MVP standing, and this and this is there, and then we find out actually nothing has been built, or the bare bones of it. So it was a high over exaggeration of where the product stands. That's also a red flag for me. And then thirdly, when a lot of big names are mentioned on blurbs, we have partnerships with BlackRock, with Chainlink, with, I don't know, some big Web2 players, big Web3 players, big names in the industry. We have investors, and several big names are mentioned there. And we do a little bit of due diligence, and we realize there are no LOIs, letters of intents, or MOUs signed with any of these companies. Maybe it's one phone call that was held with somebody in the company that's not even a decision maker. That doesn't qualify you for saying you have a partnership with that company. It's a high over exaggeration, and I understand why founders do that, but it's not the right thing to do. So you can say we're started with calls and just be honest about it, but you cannot
Right.
state, partnerships with companies because you think the brand of that company will elevate your own valuation or your own brand, because that's usually backfires. Also, a lot of companies might not end up working with you because they heard that you already were saying that this contract is signed, which never was signed. Same with investors. If you say, I have these particular investors, and we check that and we realize these investors are not actually your investors, or it's maybe a subsidiary company of a larger fund and you put the larger fund's name on there, but the larger fund is
Right.
not actually on your cap table. Little things like that, they might seem minor, but they just leave a negative impression because it's, well, are you always then going to overstate how you're doing? Because as an investor, I think genuinely, I actually want to help you. Like, I've been a founder, like I want to help you. Like, I'm on your team. If you need something, you have to ask me. I want to help you. But if you're always going to over exaggerate your numbers and your partnerships and say everything's fine, it doesn't give me a feeling of that we're in this together, which then doesn't make me want to invest.
Right. I think managing the trust deficit is very vital, because
Yeah.
it's a responsibility that you're taking on in
Yeah.
soliciting someone's money to be trusted into you, and you hold
Yeah.
that imperate responsibility to return that money back with some tangible returns on it as well.
Yeah. Yeah.
Fantastic. Cool. I think coming towards the close of this conversation, Mona, today, last two questions. One, what's your average ticket size that you typically put
Mm-hmm.
in pre-seed and and in seed as well? And second question is, let's talk about a couple of your exciting winners that you see so far in your portfolio.
Yeah, so check sizes are 100 to $500,000. And I would say, I'm really excited about a company in our portfolio called Jiritsu. I think they have a really strong moat, a very strong technical background. So I'm excited to see where they're going to go. They are pre-TGE yet at the moment, so still not launched yet. We have some bigger companies in our portfolio, like Ripple holds some XRP, which has not always been, everyone's favorite choice, but I think it's doing very well in the market right now due to its long-standing, point in the market, being in the market for a really long time. And we have, some really great other investments in the centralized finance space as well, like Swissborg, which is doing really well, has a lot of innovative projects that they're launching. We have some financial infrastructure like Onera. It's a infrastructure play that is essentially, hopefully, one of the contenders to replace the Swift network for tokenized asset trading. And maybe one other one to mention, which many may know, which is Transact, which is a fiat on and off ramp service, similar to MoonPay and several
Right.
others. But we're supporting the Transact team because we think they're one of the best in the space.
Oh, fantastic. Amazing. Looks like we have a couple of known projects in this ecosystem that have raised funding from you. So that's always good to know. Fantastic. So Mona, wrapping up this conversation, I come to the last part of, capturing your essence and also you as an individual. So this is going to be a rapid fire round with some questions around you so that people also know you a little better. So what's your, what's your favorite travel destination?
Ooh, Japan.
Japan. Oh, lovely. I love it there as well. What's your favorite food?
Shrimp.
Oh, okay. Cool.
Or
Uh,
sushi.
Fantastic. Any recent book any recent book that you read that gave you a wow effect that you recommend your fellow friends to read up as well?
I recently was reading a lot about the universe. So Stephen Hawking's actually has some very interesting books to explain physics and the universe. So I would recommend any of them. They're actually all really, really good.
Fantastic. Who, any couple of people that inspire you the most that you really look up to?
Oh, there's actually a lot of people that inspire me. I think generally, there's always, I think, women who have really powerful positions in companies that have a family at home. I think are really inspiring because it isn't easy to juggle both career and family. I think specifically as a female. So my shout out would be to those ladies for this answer.
Fantastic. Cool. Couple of misses that you regret you couldn't get your investments in.
Oh, I think a miss would have been Athena. I
Okay.
think that would have been a miss. We actually do fund of fund investments invested in a fund called Faction, and we saw Athena because of Faction, and sadly we didn't invest because we were looking at it from a very regulatory angle. But
Okay.
I think that did very, very well. Similar to Eigenlayer. I think that project did very well and was a big innovative approach to restaking. So I think from this cycle, those are the two that we missed that I wish we didn't.
Fantastic. Cool. So one last question. If someone wants to reach out to you, what's the best way for them to reach out to you?
Probably best way is either on LinkedIn, which is just my name, Mona Tiesler. There's only one of me, so it's easy to find. Or on Twitter, on X, which is Crypto Mona T, as my handle, which is also my Telegram.
Fantastic. Lovely talking to you, Mona. Thank you so much for your time today. And I'm sure a lot of listeners are watching this and are listening to this on various social media platforms. Will draw a lot of insights and will have a better way to reach out to you and explore how both of you can work together.
Thank you so much. Thank you for having me, for the nice conversation. And yeah, I hope it was interesting.
Absolutely fantastic. So thank you so much, everyone. Do log on to foundershiphq.com. We have some amazing programs for pre-token launch startups that are listed out there, where you get grants or investment up to $100,000 from one of our blockchain partners. And if you are building up on AI as well, do head out to our website, follow us on Twitter, and join our community on Telegram. So until our next episode, tune in, sign in, and be a great contributor in the Web3 space, because that's how we'll all grow together. So see you soon on the other side. Thank you so much.